Welcome, everybody. Again, my name is Heather Masso. I'm a housing counselor and educator at Penquis, been there for 14 years. And I am here with four wonderful members of First National Bank. And today we're talking to you about Homebuyer 101. What you need to know to start getting yourself ready to purchase a home. And I thought we could start out with our panelists introducing themselves and what areas they work in. So let's start with Miss Cecilia.
Hi, Heather, thanks. My name is Cecilia Lawrence. I am a mortgage loan officer with First National Bank. I am based in the Bangor branch, and I cover Penobscot and Piscataquis counties.
Thank you, Miss Cecilia. How about you, Chase?
Hey, Heather. My name is Chase Smith. I'm a loan officer for First National Bank. I work in our Calais office, and I cover all of Washington County.
Miss Patria?
Hi, I'm Patria Allen. I'm a mortgage loan officer at First National Bank. I'm based in Camden. I cover Knox and Waldo counties.
And lastly, Miss Alicia?
Good afternoon, Alicia Koss. I sit in our Rockland office and cover Knox and Franklin County.
So we wanted to dive in, and today we're going to be talking about, with Homebuyer 101, qualifying for mortgage, the 4 C's of doing so. In the first section that we're going to jump in and start asking the panelists questions is credit. Well, let me explain what credit is. Credit is character. It's how you've paid your bills and how it's reported to a credit bureau. There are 3 major credit bureaus: TransUnion, Equifax, and Experian, and a lender's looking at those 3 scores and taking your middle score. So let's start diving in and let's start asking some questions. And remember, please, if you have any questions, put a comment in the chat, and we'll go from there. So I wanted to start with Miss Cecilia, and I wanted to start talking about what is a minimum score, what is a good score for applying for a loan?
That's a great question, Heather, and I'm sure it's one that's on everybody's minds. And the answer to that, actually, it varies. It's based on the loan program that you are trying to qualify for. And when I mention a loan program, I'm talking about programs such as FHA, VA, Maine State Housing Authority, rural development, conventional, those sorts of things. And your credit score, the minimum required, varied per program. I know, I believe FHA requires a minimum of a 580 credit score. And some programs are going to require a higher credit score, such as 680 or above. I would recommend that if you are in the process of getting started, to talk with your loan officer about what program you're trying to qualify for, to see where your credit score might be. They might also have some different options available if your credit score is not at a certain point or a certain limit.
Okay, thank you. Miss Alicia, are collection accounts okay if I have those on my credit report?
They can vary with the program. And so you're going to hear us say that quite a bit today because there's different guidelines with every mortgage program available. Collection accounts can be okay. For example, Maine State Housing will allow some medical collections, but they have limitations on how much is out there and are you making payments. Other programs might want the medical collections paid or proof that you've been making payments on them. Generally speaking, if you do have collections out there, the advice is going to be for you to work on them, get some payment history established, and start working on getting those removed from your credit report.
Wonderful. Miss Patria, my car might need to be replaced soon and I'll need a new car loan. How will that affect my pre-approval?
That's an excellent question, and it happens a lot. And the answer is, like it is in so many instances, it depends. If you have no car payment now and you're looking to add a new debt, that could have a big impact on how much money you have each month to spend on a house. If you currently have a car payment and the car that you're replacing will have a payment of about the same, not higher, it shouldn't really have any impact. If you're looking to go from no car payment to an $800 a month car payment, that will have a huge impact. So I would say talk with your lender and get a sense of what this will do to the amount of money that you want to borrow for a house.
Wonderful. Chase, what can I do to improve my credit and improve my chance of qualifying for a mortgage?
That's a great question, Heather. So to touch upon some of the things that these ladies have talked about, collections, if you have collection accounts on your credit report that are unpaid, you're going to want to start paying on those, maybe getting into a repayment plan with the creditor. If you have open accounts that you have paid on time, continue to pay those as agreed. Any past due balances, definitely going to want to clear those up to improve your credit score.
What if I don't have any credit at all, Chase?
If you don't have any credit, then now is a good time to start talking to a lender to start establishing credit. Whether that means applying with a qualified cosigner or doing a secured credit card or loan with money that you've saved in the bank. Those are great options to start building your credit. Sometimes if you have alternative sources of credit, such as rent payments or utility payments that you've paid on time, those could qualify you as well.
So if I, as an example, Chase, if I went out and got a secured credit card, should I just charge the whole balance up? If they give me, say they give me a $500 limit, should I charge that up? Or
so with a credit card, it's important to always make the monthly payments on time. The best practice is not to charge it up and carry a balance on it because you'll be paying interest that may be unnecessary. The important thing is, even if you use it once a month, as long as you pay it in full or pay that payment each month, then it'll start building credit for you.
Wonderful. It's my understanding that you shouldn't keep any more than 30% of your approved limit on the credit card, correct?
That is correct. That's one of the things that's considered in your credit score is if you've maxed out credit cards. So important to keep that balance low if possible.
Because it's an overuse of credit, correct? And it'll hurt your score?
Yes.
Okay. Miss Cecilia, can I qualify for a bankruptcy? Can I qualify for a mortgage if I have a bankruptcy in the past?
It is indeed possible. It again goes back to, it depends on the loan program that you are trying to qualify for. Generally speaking, the further you are out from the last filed action date, the better it's going to look. I believe a program such as Maine State Housing or MISHA requires that you are at least 3 years out from the last filed action date. Some other programs might require a little bit further along than that, but it doesn't necessarily disqualify you from a chance at getting a mortgage.
Thank you. Ms. Alicia, so what's the difference between a medical collection versus a charge-off versus any other debt that's gone into collection, and how a lender is going to look at that?
Sure.
Address that.
Great question. So a collection that I was mentioning earlier, like a medical collection, they're actively trying to gather that money from you. And so it's understood from the lender's eyes that perhaps they're reaching out and sending you a bill. So you should be taking care of that. A charge-off has gone even a step further, and sometimes can be sold to a collection company. But a charge-off, let's say you have a credit card that you've established and something happens and you're no longer able to make that payment. That credit card company will try to reach out, get you to make the payments. And if you don't make the payments, eventually they're going to charge it off and say the client is not paying. And so it's reported to the credit bureaus that it's been charged off and no longer in repayment. So a charge off is something you should also be working on to get that rectified and paid off. I always tell my clients that when they're in a situation with charge-offs and collections, even if they have good credit that they've established and they're making those payments on time, it's like a little battlefield. They've got these bad guys and they're trying to pull them down, pull that score down, and they've got the good credit that's trying to bring it up. So they've got to work on those payments that are going to be past due, if you will, no matter the reporting.
Thank you so much. Patria, my lender is questioning recent inquiries on my credit report. Why is my lender doing that?
Well, that's a good question. It sometimes indicates that you've been out shopping for a new car, a new house, multiple credit cards, and that could have an impact on your ability to pay your new mortgage if you've just gotten a new car, just gotten some credit cards. Other times it means that you're shopping for a rate. So maybe you've talked to 2 or 3 different mortgage bankers to have them see what they can offer you for products and programs. So it might not mean that there's new credit, but we need to know why the credit was pulled, if new debt resulted from the pull, and if so, what is your monthly obligation going forward?
In reference to shopping around for mortgage rates, it was suggested for me to do that. But if more than one lender pulls my credit report, how does that impact my score, Patria?
It will drop your score ever so slightly, but not dramatically. If your score is good in the 700s, it's not really a worry. If your score is close to a cutoff for one of the various programs, whether it's 640, 680, whatever the program is requiring, you don't want to have it checked too many times for fear that the score will drop below what the minimum is for the program in which you're hoping to apply.
Wonderful. And I understand that the credit bureaus, if I shop around and have my credit bureau report pulled more than once within 45 days, it'll only impact my score once. Is that correct?
I believe that is true, but the credit bureaus set the rules and the policies, so I can't speak for them 100%.
That is true. So does anybody have any questions so far about credit? Anybody on the call that we need to dive into some more things on credit? You can always look at your credit without getting a score on annualcreditreport.com through the 3 major credit bureaus, TransUnion, Equifax, and Experian. Again, make sure you're going to actualannualcreditreport.com. They don't charge you, and you have the right once a year to get a copy of each report per the Dodd-Frank Act after the foreclosure crisis. So please look at your credit and have an idea before you start talking about getting a loan, and you can bring that with you with the lender and talk about your credit and go from there. Is there anything else any of you panelists would like to add about credit that we may have missed? Or
Heather?
I do see a question. Yes, ma'am.
I was just going to add that I agree. Pulling your own credit report in advance is an excellent process. And sometimes, along the lines of doing multiple credit inquiries at multiple lenders, it could be helpful to have that credit report to understand where you're at and understand would you fit into some of the credit criteria that lender could offer, and just having a conversation before you actually complete the full application.
Wonderful. And it doesn't impact your score at all because it's not giving you scoring. And it's a great way to keep on top of your credit. And there are also other tools out there. As an example, Credit Karma, there's many out there. The scoring is different than you'll see with a mortgage credit scoring, but it's a great way to keep on top of daily things. So we do have a question in the chat. Cecilia, how does the change in inflation impact your credit score, or does it impact it at all?
That is a good question. And honestly, I'm not 100% sure on the answer to that. I don't really think that it impacts your credit. As long as you are continuing to make your payments on time, you haven't fallen behind, you don't have any late fees or late notices reported, that should not really impact you.
Nope, just keep paying your bills and keep your debts low. So I think we covered credit pretty well.
Heather,
yes,
may I jump in with just an addition to that?
You sure can, Ms. Patria.
Anytime you run into an issue and you're not able to make your payments, contact your lender immediately, whether it's illness, injury, loss of a job, anything like that. Reach out to your lender because they might have an option to help you if you let them know early in the process. If you wait until you're 90 days past due, the options are minimal, if any. So if you run into a situation where you can't make a payment, reach out to your lender and see if there's an option for you.
Patria, that's perfect advice. As a housing counselor, I encourage that all the time. And I work with people behind on mortgages. So I always say communicate, communicate, communicate. It gets scary when you get behind on payments and overwhelming. But even if you've had issues in the past, there's always a way to rebuild with the help of a lender or a housing counselor. So don't be afraid. So let's jump into the next section, please. So the next section of qualifying for a mortgage in the 4 C's would be capacity. What is capacity? It's your earnings, it's your income. So a lender's going to be looking at specific things to verify your income. So I thought we could dive in and start talking about the documentation and what is needed and what you should prepare when you sit down. And Alicia, I thought we'd start with you. What income documentations would you need from me?
Great question. So it depends on the type of the loan, of course, as far as what's going to be required. But generally speaking, if you're buying your first home, you should be prepared to have about 3 years worth of federal tax returns, W-2s, most recent pay stub if you're employed. If you are self-employed, you might have income that's running through your personal tax returns, or you might have a separate business return. So you should be prepared to bring those as well. Your lender will be looking at that to do what we call cash flow analysis to determine what your income actually is. Additionally, beyond that, if you do own any property, any land, let's say, because you don't have a house at this point, but you have land, bring your tax bill. The lender will want to look at that for an expense purpose. But generally speaking, first-time homebuyer programs are 3 years of documents. And then if it's just a conventional financing type program or maybe a construction loan, it's 2 years.
So if I'm self-employed, what would I need? Besides the tax returns, sorry.
Yeah. So the federal tax returns will be very helpful. Sometimes a person who is self-employed is issued what's called a 1099. It's a little different than someone who's employed has the W-2. So if you're a 1099 subcontractor, that person that pays you gives you one 1099 at the end of the year to show you what you were paid. And so that should be included too. But otherwise, the tax returns or business tax returns, 1099s, all those pieces will be looked at. There are times when we'll need something called a profit and loss, or something to indicate how much income you've made year to date.
So a profit and loss will show what income I've received and the expenses of my business?
It will, absolutely.
Wonderful. What if I receive pension or disability or Social Security incomes?
Great question. So retirement income is a little bit different. Those will also have 1099s. So Social Security, pensions. There's actually some income that is not taxed. From veterans, for example, have untaxed income. So we just need to know about that. So bring any award letters. Sometimes those are applicable as well. If you have retired and you're drawing your retirement income from an IRA or from stocks, you probably want to bring along your statements as well. And I usually stress to my clients that when you're bringing statements in, please bring all the pages.
Definitely, definitely. Thank you. Patria, my student loans are in forbearance. Will they be considered as debt?
Yes. So depending on the program, depends on how we have to factor that. Generally speaking, we have to count 1/2 of 1% of the balance. So for example, if you have $10,000 in student loan debt, 1/2 of 1% of that is $50 per month is the amount we would use as a monthly payment for you.
Wonderful, thank you. Chase, once I'm pre-approved, what happens if the rates go up?
Great question, Heather, because rates have been increasing lately, sometimes daily. If the interest rate increases after you've been pre-approved, your lender will need to qualify you at the increased rate, because you don't get locked into an interest rate until you're actually under contract to purchase a home. So something to keep in mind, if rates increase, definitely check with your lender, make sure you still qualify with the higher payment due to the increased rate.
Thank you. Back to you, Alicia. One question I forgot to ask you. What if I have child support or alimony? Do I need to disclose that?
You don't need to disclose it. However, if you wanted to, and it's going to be an ongoing source, as long as, generally speaking, as long as the lender can determine that it's going to be ongoing for 3 years or longer, it is something that you could use to qualify for that repayment source of income. So if there's child support, usually we're looking for some sort of documentation, whether it be a divorce decree and a child support worksheet, or some sort of determination from perhaps the state of Maine to show you that you're receiving that. Alimony, again, the divorce decree.
Thank you so much.
You're welcome.
Cecilia, what happens, what will it matter if I change jobs during the process?
That is a good question. And believe it or not, it does happen, probably a little bit more frequently than you would think. It's not necessarily a bad thing, but like most things that we have discussed, you definitely should speak with your lender before you do decide to change jobs. Depending on what your current career is, let's say, for example, if you are a teacher teaching at one school district and you are going to make a likewise move and you're going to become a teacher at a different school district, it's probably not going to affect you as if you were a teacher and you're looking to completely change your career and go into a totally different field. Ultimately, speak with your lender before making any sort of decisions such as changing your career to see if that does impact your ability to qualify or not.
What can I do if I to qualify for a larger mortgage, Cecilia?
For a larger, sorry. So you're looking to qualify for additional.
Yes.
Sorry.
Any of the panelists can jump in too if you're coughing. I understand you're not feeling well.
If you want to qualify for a larger mortgage, there's 2 basic things you need: less debt, more income. So sometimes it makes sense to look at consolidating some of your debt to lower the payment, extend out the term, or find a way to get more income. If you take on a second job, we can't count that income until you've had the second job for 12 months just to see how it goes and what the income is. But those are the 2 best ways to have a larger mortgage.
Thank you. Tria, could you also touch on overtime income or bonus or commission income, and how do we look at that, and how can I use that as additional incomes to qualify for more?
Sure. As is the case with most things in mortgage banking, we look at 2 years in the past and 3 years in the future. So if you're a car salesman and you're new at car sales, we can't count commission income until you have a 2-year history of it and it's expected to continue. The same with overtime or a bonus. Just because you got a bonus last year doesn't mean that you'll get a bonus this year. Or if you worked overtime last year, you might not do it this year. So with those, we look at a 2-year average, and also with the verification of employment, we send that to the Human Resources Department, and they let us know if bonuses are expected to continue, if overtime is expected to continue.
Wonderful, thank you. Miss Alicia, how do you determine the amount I'm pre-approved for?
So we will be looking at your income and what income we can use for repayment, as Patria just spoke about. And so usually base pay from employment for sure. We look at the overtime if there's a history and say, what payment from there can you afford given your current other payments that you have? So the other payments, we're going to look at what's on your credit report that you're responsible for as far as minimum payments go. We talked about the student loans and how we might look at that. Are there any credit cards, auto loans? Additionally, there could be a situation where one is responsible for child support or alimony. So those are taken into consideration as well. From there, we take your monthly income, your minimum monthly debts, and we create something called your debt to income, and it's looked at from a monthly basis. And that housing payment, whatever we're proposing, has to fit within the program criteria. So it can vary from program to program, mortgage program to program. And so a general rule of thumb that I share with my clients is the Maine State Housing Authority debt to income percentage, which is taking 29% of your monthly income to say this might be a good fit for your housing payment, as long as the other payments are going to fit within the total debt to income, which again, a general rule of thumb, 41%.
And I understand you're using my gross income before taxes instead of my take-home pay. Is that correct, Alicia?
That is correct. So we're always going to be looking at the gross pay before any deductions are taken out of your income. Great question.
Thank you. We do have a question in the chat, and I'm going to give that to Mr. Chase. Do all loan programs require a 2-year work history in a similar field or industry?
That's a great question. In most cases, yes. In circumstances where you may have attended a training program or been in school, post-secondary education, college or university for a certain trade, and let's say you may have worked in the new field for only a year. So an example that I would use would be a nurse. So went to college to become a nurse, has worked in the field for a year. That's an instance where less than a 2-year employment history may be acceptable, but in most cases, a 2-year history is required.
So wonderful. So we're kind of building a foundation here of what you need to do in Homebuyer one-on-one. So let's review really quick. We talked about credit and what you need for scoring to show a lender that you make payments on time. And we've talked about capacity, your income, and showing that you've been employed or receiving certain income for a certain amount of time that's going to continue. And that's my capacity to the lender to make these payments. So do we have any other questions in the chat box, or would any of the panelists like to talk about anything else with capacity? Did we miss anything?
The only thing I'd add maybe about capacity is for some of the tax-free income, like VA disability benefits, we can gross it up. So in essence, we add a little bit to it so it will work more like a gross monthly income. So that's just something to keep in mind.
What if to establish, and my father helped me establish credit and he put me on one of his credit cards, but he has a really high balance. How is that going to affect me?
It depends. If you're an authorized user on the credit card, we don't need to count the payment because you're not responsible for it. If you're a co-owner of the credit card, then that payment will be factored into your debt to income. And if there's a high balance in relation to the line, that could be hurting your credit score. So I would suggest talking to Dad about closing out the account.
Or can he remove me as an authorized user?
He should be able to.
Wonderful. Okay, thank you. So moving on in the qualifying for a mortgage, the 4 C's, Homebuyer one-on-one, we want to now talk about capital. What is capital? Capital is what you have in the bank, savings, investments, things of that nature. And we wanted to dive in and start with Chase. So Chase, I've been offered a gift by my aunt to help me with down payment and closing costs. Is that usable? How does a lender look at that?
So a gift in most cases is usable towards your down payment and closing costs, as long as it's from a relative. In this instance, where it's an aunt, I'm going to ask one of the other ladies to step in because I'm actually unsure if a gift from an aunt would be considered a close relative.
Generally speaking, it's not. However, if the aunt raised you, let's say your mother passed away and your aunt raised you, then you could document it to the point that it would make sense that she would be gifting you money. If it's just a distantly related or connected aunt, that won't work.
Okay.
Thank you, Patria. That was my thoughts as well, but I wasn't 100% sure.
Yeah.
Cecilia, will I need any money at closing?
Potentially, yes. It depends on the loan program that you're going for. Depending on what your down payment requirement is, if there is one. There are loan programs out there that have a 0 down payment. So you may not need a down payment, but you might need to accommodate for closing costs. Other loan programs, you might need, 5, 10, 15, 20%, depending on the particular terms of your loan. But I would say at a minimum, you should definitely plan for potentially bringing at least closing costs to your closing.
Okay. And Alicia, what if my house appraises for more than the purchase price? Is that less of a down payment for me?
Great question. And it comes up. So in the instance where a home appraises for more than the sales price, the lender is going to usually look at it with the lesser of the two. So the sales price typically is what we're going to go by. So if you do have an appraisal that comes in a little bit higher, yay for you, because you automatically are going to have a little bit of equity built into that home.
Wonderful. And Patria, my down payment is in cash. Is that okay?
Cash is always a problem because we have no way of knowing when you show up to make a deposit if you've had that money for any length of time, if you borrowed it, or if it was a gift. So I would say if your down payment money is in cash, get it into the bank as quickly as possible so we can track it to know that it's actually here and yours. Any deposits made within 60 days of closing, we need to have the source and we would need to know where it is. So if you've got cash, get it into the bank.
Thank you. Chase, can I use equity in another property I own for a down payment and closing costs?
You absolutely can, Heather. So in that instance, you'd likely be borrowing against the equity in your current home and taking a loan out on it. So as long as the payment for the home equity loan that you're borrowing against fits into the debt to income ratio for the loan program you're applying for, then that is certainly acceptable.
Thank you. Cecilia, I don't have 20% for a down payment. Can I still qualify for a mortgage?
Yes, the 20% is a myth. I think at one point in time, it was kind of more established that you needed 20% down to purchase a home. There are programs out there that are widely available so that if you don't have 20%, then you can come in with less. FHA, for example, I believe only requires 3.5% down. There are some programs, as I mentioned earlier, that 0% down, 1% as your minimum. You could also potentially qualify for private mortgage insurance so that you could bring that down payment amount required to 5, 10, or 15%. You don't necessarily have to have 20% to purchase a home.
Thank you. Alicia, I have a 401k and I'm allowed to take money out for my down payment and closing costs. What does a lender need from me, or what will I need in this process?
That is a good source for the down payment. It could work in a couple of ways. If you were doing a withdrawal, the lender's going to want a copy of the statement from the 401k. It could be a monthly or a quarterly statement, but the most recent statement. And then we're going to need proof when you have that withdrawal happen. Maybe you get a check in the mail, or there's a transfer that goes from the 401k to your bank account. We're going to be looking to sort of connect the dots and say, okay, do we have a copy of the check, or is there a statement from that bank account that the deposit went into? If you are doing a withdrawal, that's perfectly acceptable. Another thing that some clients will do is they'll actually borrow money from their 401k. And when generally with most loan programs, when you borrow money from your 401k, you're using that 401k as the collateral, we don't count that payment because you have it secured with your 401k. But talk to your employer or whoever manages that retirement account for you to find out what your options are as far as withdrawals or loans.
Do I need to provide you with bank statements? And in addition to that, I have a friend who applied for a mortgage and the lender's asking about deposits.
Absolutely. Patria touched on the fact that cash is not allowed in mortgage transactions. And so a lot of the loan programs, Main State Housing, Rural Development, they're going to want us as the lender to look at those statements. So generally 2 months of statements for all bank accounts. And then from there, I usually have my clients look down through that activity, what deposits went in there. And if we can tell that it's direct deposit from the employer, really no questions are going to be asked. Or even if we can document clearly that there was a transfer between, say, the checking and the savings account, and we've got both of those statements, those are pretty easy. But when we see deposits going in over the course of the past couple of months, and it's 200 and 400 and 50 and 75, but there's no explanation that's clear, we're going to ask, can you give us a copy of whatever was deposited? If it was cash, where did the cash come from? And so I'll have my client make a little list for those multiple deposits and say, what was this from? So they're looking to see, is there other sources of income? Some of the programs with first-time home buyers are going to have income limitations on how much money you can make or the household can make. And so they want to make sure that we have all of those sources accounted for.
Wonderful. So we're building forward. So we've shown that you, on your credit, what you need for scores and show that you're paying your bills on time for a lender. We've talked about how you show repayment ability with your income, and that's going to continue. And now we've talked about capital and having money saved for down payment and closing costs, and showing the lender that after you pay your bills, you can afford to purchase a home. Does anyone on the panel want to add any more to the capital piece before we move forward to the fourth and final piece of the 4 C's?
Deposit your savings. Don't keep it in a coffee can and under the mattress. Please put it in the bank so it's there for when we do need to document your savings.
So it needs to be seasoned for a few months, correct?
It does. Generally speaking, we need to have 2 months of bank statements. If a client was going to have a large $5,000 deposit in cash, that's going to be questioned. The lender doesn't want to see that you've obtained a private loan or you have this cash. They're going to question, where did that come from?
Wonderful. So any questions in the chat over the capital piece? Okay, I'm not seeing any. So the fourth and final piece of qualifying for a mortgage, the 4 C's of credit, is collateral. And what collateral is Patria, can you explain what the collateral is?
Yes, when you're buying a home, the home is collateral. That's the thing that's securing the loan. If you're buying a car, the car is collateral. So if you don't make your payments, the lender, through a legal process, will have the ability to take the collateral back, the house through foreclosure, the car through repossession.
And Chase, what if my home needs repairs?
Great question, Heather. If your home needs repairs or the home you're purchasing needs repairs, there are programs out there that you may still be able to purchase the property and finance the repairs. Maine State Housing Authority has a purchase plus improvements program where up to $35,000 in repairs to the home can be included in the loan amount, assuming the purchase price plus the cost of improvements is at or below the appraised value, then that could be acceptable. As far as conventional loan options, I know we here at First National Bank offer a construction loan where you can purchase a home and make renovations, and your down payment is based on either the appraised value, down payment is based on the total acquisition cost, which is the purchase price of the home plus improvements. So as an example, if you're buying a house that's $150,000 and you're looking to finance $50,000 in repairs, the total acquisition cost would be $200,000. So your down payment requirement would be based on that amount.
Wonderful. And I understand FHA has a 203K program as well that you could do repairs to your home.
Yes, we don't offer FHA here at First National Bank, but for lenders that do, that is a great program to look into.
Wonderful. So there's options out there. Cecilia, can I buy a mobile home? Are there any limitations?
Yes, you could potentially purchase a mobile home, and depending on the particular loan program and the lender that you are using, there could very well be limitations on the mobile home. Are you looking to purchase a single wide or a double wide? What is the age of the home? Some will require a shorter loan term if the home is older. The interest rate could potentially vary on those as well. Is the home going to be on land that is owned and is going to be attached to a foundation or a slab? Are you looking to put a home on leased land, such as in a mobile home park? There are some programs out there and there are options available. If it is something that you are considering, I would suggest that you speak with a loan officer to see what particular programs might apply, what the terms would be, and obviously if you are able to qualify for it.
Wonderful. Alicia, what if my property appraises for less than I've offered to purchase it?
In that instance, the lender will reach out. We receive the appraisal, and I would personally reach out to my client and the realtor to alert them that the appraised value has come in a little bit lower, hopefully only a little bit. And so after that information is delivered, oftentimes I find that the realtor will work with the client to go back to renegotiate and figure out, can the seller and the buyer come to some sort of agreement to reduce the price? If that doesn't happen, sometimes a buyer will actually make a larger down payment. So they might make a down payment to make up the difference in the appraised value and the sales price, so that they can proceed with that purchase. So for some reason they feel it's worth it to proceed and pay a little bit extra to make that purchase happen.
Wonderful, thank you. Patria, how soon can I close?
Well, not as soon as you probably would like, unfortunately. So right now with the volume, it's generally 45 to 60 days, depending on the type of program. But also what really determines how quickly somebody will be able to close is how responsive that person is in getting their documentation into the bank, getting the application fee, and making sure that if we have questions, they respond quickly with the answers and the information. That will speed things up quite a bit, but you should definitely, in this market, with everybody being busy, plan on 45 to 60 days.
Chase, who's considered a first-time home buyer?
A first-time home buyer is somebody who has not owned a home in the last 3 years. If they've owned a property that's land only, or if they've owned a mobile home, but it's not been on land that they've owned, then they are considered a first-time home buyer.
Thank you. Cecilia, what if I want to buy a tiny home? Do we do tiny homes?
That is a good question, Heather. And honestly, it would probably depend and vary per lending office that you go to. The issue that you usually come up with against a tiny home is a lot of them could still be on wheels so that you could move around. I know that is an appeal for some people, and that's not necessarily something that I think you could probably get a mortgage on. And the other potential issue that you could come across is finding comparables for the appraisal. It might be difficult to get an appraisal done on a tiny home. I'm not sure if my colleagues might have had additional experience with those, but I would say it'd probably be a discussion to have with whatever lender that you were wanting to go with to see if they had any opportunities available.
Thank you so much. So we've gone through all our 4 C's for qualifying for a mortgage: character, capacity, capital, and collateral. Is there anything else the panelists would like to add that would be helpful for the homebuyer one-on-one? Or do we have any questions? Oh, go ahead, Ms. Cecilia.
I was just going to say that I know that buying a home can be very overwhelming. It can be a very scary process, but don't hesitate to reach out to a lender. Even if you think that your credit maybe is not so great, maybe you're embarrassed with how your credit might look, your lender is not judging you. We are here to help you. We want to be able to get you into a position to purchase a home. No question is a stupid question. We are here to answer anything that you might have, and just, develop a relationship. And if it's not something that you can necessarily obtain right now, your lender can guide you on what you can do to get you ready in the future to be in a position to purchase a home.
Wonderful. It can take time, but it's worth it. And to build that relationship, like you stated, to get to your goal. And do we have any questions in the, let's see, Teddy asked, will there be a recording of this webinar be available? Yes, there will. We have recorded this, and it'll be on Penquis's Facebook page, and we'll share it with the first, and so it'll be available for others to go back and watch if they weren't able to make it. I really, really want to thank the panelists. Their contact information is going to be provided, and so you can reach out to each one of them. And I want to thank everybody for taking their time on their lunch hour. But if we have any more questions, I don't see any. I believe the contact information is coming up. They all work in different areas for First National Bank. So any one of them is a wonderful resource. And I thank them all so much for taking the time and letting me be involved in this process. I think
this was really fun, Heather. Thank you for including us.
Yes, I think it was very informational, and I think it'll help people to know that it's not such a scary process, and they can see your faces and that you're approachable and that you're there to help them reach their goal.
Absolutely. And if we can't say yes yet, we'll help them get on the path so we can say yes at some point.
Exactly. Well, I want to thank everybody for attending. Again, this is recorded and it will be listed on Penquis's Facebook page. And we showed the contact information for Chase, Alicia, Patria, and Cecilia. They've all been doing it a while and doing a great job. And thank you so much for partnering with Penquis. This was a fun first webinar on Homebuyer One-on-One. Thank you.
Thank you, Heather. Thank you, Penquis.
Thank you, everybody.
Thank you.
Thank you so much.